Wall Street just went on-chain, and at the same time, the Fed just made its first rate cut of the year. Put those two forces together, and the stage is set for one of the strongest altcoin seasons we've seen in years. So, what just happened? On September 8th, Nasdaq submitted a proposal to the SEC that could change everything. They want approval to launch tokenized equity and ETF trading. That means investors will be able to choose between traditional settlement or blockchain-based settlement. Voting rights, fungibility, and wallet-based settlement are all built in. It's a huge step toward merging US capital markets with blockchain technology. Just a few days later, on September 12th, Gemini went public with its IPO, raising $317 million and landing a valuation of $2.2 billion. The ticker is GEMI. Investor demand was strong, fueled by the trust Gemini regained after resolving its $2.18 billion earned settlement. For many, this IPO marks Gemini as a new, credible gateway for mainstream investors to step directly into crypto. Together, these events create two powerful on-ramps for institutions. Nasdaq's move validates tokenization. Gemini's IPO adds credibility to crypto exchanges. The altcoins reaping the biggest benefits so far are Ethereum, Solana, and the broader DeFi sector. Analysts are already calling for Ethereum to test $4,500 to $4,700 in the short term, with a long-term potential above $10,000 if ETF flows keep coming. But there's another massive catalyst at play, the Federal. On September 17th, the Federal Reserve cut interest rates by 25 basis points, bringing the range down to 4.0 to 4.25%. This was the first cut since December 2024. The Fed pointed to slower job gains, rising unemployment risks, and sticky inflation as reasons for easing. One policymaker even pushed for a bigger half-point cut. The market reaction was immediate. Bond yields slipped, stocks whipped around, and crypto held its ground. With borrowing costs lower, risk assets like Bitcoin and altcoins suddenly look a lot more attractive. If conditions weaken further, the Fed has hinted at 2 more cuts before year's end. Put simply, Fed easing plus institutional inflows create a very bullish setup. Now, let's zoom in on an emerging play in DeFi, Mutuum Finance, ticker MUTM. This is a fast-rising protocol with deep chain link integrations. They've already raised over $15 million and attracted more than 16,000 investors. With its focus on liquidity and efficient lending, Mutuum is starting to earn blue-chip DeFi status. Here are 3 quick hits. First, Ethereum ETF inflows are accelerating, fueling the strongest altcoin rotation since 2021. Second, Solana's ecosystem is rallying hard on the back of institutional allocations. And third, BlackRock and Fidelity are both increasing their ETH and SOL exposure through ETFs. The bottom line, institutions are finally going big, and the Fed just added fuel by making money cheaper. The only question left is, how long before altcoins explode even higher? Make sure you subscribe so you don't miss what comes next, and search BTCC now to track these moves with real-time alerts.